Hi, welcome to our May forecast. Well, the national news says the stock market is declining, Bitcoin is crashing. The question is housing going to be next? What's happening in Madison County? Let's take a look. This month in our May Huntsville Real Estate Market Report, we're going to take a look at the shifting market. Yes, the real estate market is shifting. We're going to go right directly to the headlines. CoreLogic U.S. home price gains hit all-time high in March. Now, you have to pay attention to these headlines and understand what they're talking about. Even though home prices did hit an all-time high in March, this article is talking about home price gains. The reason that it's important is because in the subtitle, they say gains are projected to decline sharply over the next year. And if you don't pay attention to that headline, you may think they're talking about home prices are going to projected to decline sharply over the next year, but that's not what they're talking about. Talking about price gains, 20% year over year in March. We've been saying for months that is not sustainable. Within 90 days, that 20% may be at zero. So we'll see shortly what's happening in Madison County. Our prices are leveling out, but we may be pretty close to a 0% year-over-year gain in housing prices. Supply is starting to improve nationally. We're going to take a look in a minute at how it looks in Madison County. That's probably because of the high interest rates, rising mortgage rates. It's putting a real crunch on especially the first-time home buyers. People who are buying homes on a budget based on a house payment. The price of the home that they can buy is down significantly because rates have run up so sharply this year so far. For Madison County in the first quarter, our prices did hit a record high. We recorded an average level sales price of $333,000 in March. That's an all-time high. Interesting that the homes between $500,000 and $800,000 more than doubled in sales, but the $200,000 home is disappearing. Homes under $200,000 have been declining for 3 years in a row now, and it's almost impossible to find homes in that price point. This is another reason that first-time home buyers are leaving the market. They're just so discouraged. Not only can they not buy as much home as they used to could buy because of interest rates, now they can't find a home in their price range because these $200,000 starter homes are disappearing. You know, the first-time home buyer, unfortunately, over the next few years may become the first-time home renter because they just can't afford to get into the market right now. Almost half of the homes sold at above the list price. And in Madison County, this is a little bit misleading because a third of our sales are new construction. And most of our builders list a home and they sell the home at that list price. So they do not sell above list price. Now, there are a handful of builders that do take offers or bids on their new construction, but most of the new home construction prices, they post the price, first come, first serve. We're really, for the homes that are eligible to sell over list price, probably 2 out of 3 are going over list price. Inflation is very high, as you know. Now, some key takeaways nationally. The supply of homes nationally is starting to show some improvement. You remember we've talked about for several months that demand is so strong, and this rise in interest rates is going to decrease demand. Primarily first-time home buyers and also investors who are financing their investments. Those are the two groups right now that we're seeing a decline in because of interest rates moving up. In April, inventory was 12% lower than the year earlier month, and that's an improvement because that's the smallest year-over-year decline in almost 3 years. So inventory is at best stabilizing and maybe even be increasing a little bit. Shift in supply, as we've said before, due to recent hikes in mortgage rates and prices just going higher and higher on these homes. But the number of active listings is down 2/3 from pre-pandemic levels. So we're still at a very low inventory level. In Madison County, now we're going to back up and look at the long term here. We're going to take a look at 3 years back, because that's what we have to do so that you can see a shift occurring. But I think you could fairly say that prices in Madison County are stabilizing. If you look at the price per foot back in July of last year at $159, price per foot last week in May at $163, I think you could say that prices are stabilizing. In about 3 months, we will probably be at a 0% year-over-year price increase. coming off of a 20% year-over-year price increase just 2 months ago. So you can see, I think our prices are stabilizing. When we take a look at properties with price decreases, they're back up into normal levels. This is pre-pandemic levels. About 25% of the homes on the market have price decreases. That's a normal number. You can see during the pandemic when homes were just selling in a day or two, less than 10% of homes on the market had price reductions because people were buying everything that they could get their hands on. But now recently you can see we're getting back up into that 25% level. That's very normal. Sellers are going to overshoot the market. They're going to expect prices to keep rising like they have for the last couple of years. They put their home on the market too high in 2 or 3 weeks. They're nervous because it hadn't sold, and then those prices start to come down. Inventory in Madison County has not budged. We still just have minimal inventory on the market. You can see pre-pandemic we had over 2,000 homes on the market in Madison County. Today we've got about 250. That's just pitiful. I don't think there's any way that we can get any lower than that. I hate to say that, but that's just homes are still selling in a day or two in our market. We still have multiple offers on every home that is in good condition or move-in ready condition. So we haven't seen locally any improvement in inventory as they're advertising that they have seen nationally. Just to take a look back to last month, this is our market action index. It shows the velocity of our local market. You can see last month we were almost pegging out at 100. That's as high as it can go. And it has trailed off a little bit this month down to 84, but still a very strong seller's market. The two questions we get all the time: when is housing prices going to crash, and how high are mortgage rates going to go? The only reason people even ask about when are housing prices going to crash is because of the Great Recession about 15 years ago. If you look at this chart over the last 75 years, starting from the end of World War II, there's only one time in that 75-year history when housing prices dropped significantly, and that was during the Great Recession back around 2006, 8, 10, and 12. And people are wondering, is that going to happen again? They're waiting. There are people that are waiting to buy, waiting for prices to crash again, 20 or 30 or 40%. If you're waiting on the housing market to crash, don't do it. It's not going to happen. Prices are not going to crash like they did back in the Great Recession. There's two significant reasons, we go over these regularly, why that just can't happen. The first one is lending is significantly safer today than it was in the Great Recession. Lending standards are nothing like they were back in 2000s. There are two categories here: product risk and borrower risk. Product risk, if you see that red chart back when we had the Great Recession, that was because there were a lot of mortgage products that were just terribly risky. You could get a mortgage without any documents. All you had to do is sign the form and start making the payments. You didn't have to prove income. You didn't have to prove that you could make payments. All those risky mortgage products are gone. There's no more red in this chart as we enter 2021, 22, and 20. Borrower risk is significantly better. People who are actually getting mortgages today have to prove that they can repay the mortgage. They have to have assets to buy the home. There's no zero down home purchases anymore. You have to have money to make a purchase. And so the borrower risk is significantly better. The risky products are gone. This is another example. Back in the Great Recession, this is the loans that were given to people with a credit score below 620. You can see how high it is. After the Great Recession occurred, that lending stopped, just like the risky mortgages. Now you can see it's a very low part of the overall mortgage market. So lending standards are higher. Buyers are higher qualified. Financially, we're in a significantly better place than we were back in 2008, 10, and 12. The other significant reason that we just cannot have a significant price decline is we don't have homes to sell. High School Economics 101, supply and demand. If you do have more demand than you have supply, prices are going to go up. The only way that you can have prices decline is if you have more supply than you have demand. Look at where the supply was back during the Great Recession. Almost 10 months of inventory on the market. Nationally, last year we ended at about 1.8 months of inventory on the market. We just showed you in Madison County, we have about 2 weeks inventory on the market in Madison County. So there's no way for us to have a significant price reduction with this kind of inventory. Where's the inventory going to come from? Is everybody going to wake up tomorrow and decide they're going to sell their homes, so all of a sudden we're going to be flooded with homes on the market? I don't think that's going to happen. The inventory back in the Great Recession came from foreclosures. You can see the number of foreclosures back in the Great Recession, 2 million, 2 million, almost 3 million, 2 million per year. Today, foreclosures are almost non-existent. If you've been in a home for 2 years or more and you're behind on your payments, you're not going to foreclose. You're going to sell it, take your equity out, and go rent something and move on to something else. Estimated home price performance going forward, there are no projections for price declines going forward. As a matter of fact, this will probably be 22, the last year of a significant price gain year over year. We look like we're going to get back to a normal 3 to 4% a year price appreciation for real estate going forward. That's a historical level. That's where it's typically always been. So these abnormal price increases, I think, are going to come to an end. What are we looking for over the next 90 days? Prices to hold steady or continue to rise slightly. We've kind of stabled off in Madison County. I expect us to float around this level, maybe a little higher, maybe a little lower, but be pretty steady. Interest rates, we still expect those to continue to go higher. Some projections are that we might get close to 6%. Very few people see over 6%, but we should rise steadily into the 5s over the next few months. The demand is slowing at the lower end of the market, especially for first-time home buyers and demand from investors who have to finance their purchases. So that is going to give us some relief, and we should see over the next few months our supply increase. We've got a lot of resources on our website. If you have questions, leave them in the comments below. If we can help you with your next move, please reach out. We'd be glad to help. Go out and make it a great day.